Hello, Assalamu alaikum. Welcome to Medidia. My name is Umar Tariq. So I'm going to explain what's the difference between realized gain versus unrealized gain. This is going to be an extremely short video, but basically, a lot of you guys are confused between realized gain versus unrealized gain. Let's talk about some basics. Anytime you buy a stock or a share, uh, you buy it for a price and then you sell it for a price, right? If you sell it for a price that's higher than what you bought it for, then you're selling it for a gain. And if you sell it for a price that's lower, then of course it's a loss. So this is gain or loss. Now, what you should try to do is always buy the stock at a super cheap price. That means whenever the market is down, that's what your aim should be. In the long run, nobody can do that because you can't time the market. So that's not like long-term strategy. But if you're into active stock picking, that's what most people try to do. Whenever the market is down, they try to buy a lot more. So now the question arises: when the market crashes, do you lose money? You don't. So I have heard a lot of people say, "Oh, the market crash, I lost 5,000. Oh, market crash, I lost 20,000." You didn't. You only lose money when a trade is closed. What does that mean? That means you bought a share, you held it for a month or a couple of months or 5 years, I don't care, and then you sell it. When you sell it, that is the only time when the trade is closed. So you bought a share, you held it for that much, whatever time period, and then you sell it. That is when the trade is closed. When the trade is closed, that your selling price and your cost price, you take the difference and you determine if you sold it for a net gain or a net loss. This is a realized gain or realized loss. So now let's come to what is unrealized gain and unrealized loss. So the daily fluctuations in stock market, as we all know, it goes up and down all the time. So the daily fluctuations of the stock market, uh, they cause unrealized gain or loss. What that means, let's say you bought a share for $10. Today, that share is $12. So you have an unrealized gain of $2. Let's say tomorrow it goes down and it's $8. Now you have an unrealized loss of $2. But that doesn't mean that you have lost those $2 or gained any $2 when it went up. It simply means that if you sell everything today that's in your portfolio, that's what it's going to be. Is it going to be a net positive unrealized gain? And when you sell all the portfolio, that will become a realized gain. Similarly, if you sell everything for a loss, that's your unrealized, but once you sell it, that becomes a realized loss. So don't think that, oh, I lost all my money in my portfolio because the market has crashed 5%, 10%, 20%. You lose all your money if a company that or your portfolio comes down and never recovers. Since we all know market fluctuates all the time, so your strategy should be to buy good stocks of good companies at super cheap bargain prices. If you buy them for higher, like the most expensive prices, when everybody in the news and everybody's talking about the stock prices going up and, oh, this is an awesome stock, it went up 50% in past 5 days, or I don't know, 20% in past 1 month, and you jump, then you're more than likely to lose money, as compared to, let's say, if there was a very good company, very good stock, and something very benign came up. They missed the target of their income for 1 quarter or something like that. If you go in at that time and buy that and bulk it up, like buy it at very high prices, then that then you're more than likely to have good gains overall in the long term. So this I thought would help a lot of people. A lot of you asked me that, please tell us the difference between what's the when we open a brokerage account or any Roth IRA account and it shows unrealized gain. What does that mean? And realized gain, what does that mean? So realized gain is actually only looking at your closed trades when you bought it and sold something. That is realized. And unrealized is something that you haven't sold yet. And it's just telling you that if you sold all of your portfolio or whatever share you're looking at, that's what you're going to gain or lose. And one more thing about this is like If you hold a share or a stock for 12 months or less, then you pay whatever is your normal regular tax bracket. And if you hold it for 12 months or more, you pay long-term taxes on capital gains. And the long-term ones, if you make less than 75,000 overall, then it's 0%. Or if it's more, somewhere between 75 to 422 something, it's 15%. If you make more than 422, it's 20%. And these things are always subject to change. So right now, as of January 2021, this is what it is. Well, I hope this video helped you. If it did, please like this video, subscribe to the channel, and like I always say to everyone, never give up, never lose hope. Thanks. Bye.